decided to add this slide in here and make a quick video. And this will help you just go through some of the terminology that's used in describing transactions, or what something might have said when you are doing a question. So when it says that something is purchased on account, that means that the business has not yet paid cash for that amount. So say it said that you purchased inventory on account. So you got that inventory, that's the asset you've received, but you haven't yet paid cash. So for this, you would need to use accounts payable as your credit. You're setting up that liability account. If something says, or the question says that you performed a service or sold a good, again, on account, now this is the opposite side. You've done the work, you've earned the revenue, but you haven't received the cash yet. So now you would be using the accounts receivable account there. So you're setting that up as a reminder you still need to receive, or you still need to collect that amount. Now this next one is the same idea. So if you've billed a customer for $3,000 on April 10th, that's another way of saying you've done the work and you've sent them a bill, but they haven't paid you. So again, you would use accounts receivable. Now in these first ones, we've purchased or done work on account, but eventually we're going to pay that or collect it. So you may also see now where a question says you paid for an amount owing from January 10th. Well, earlier on January 10th, you would have recorded something where you purchased it on account. So you set up the AP earlier, and now you're paying off that amount. So you would have cash going out because you're paying something, and you're going to be decreasing the accounts payable because you're paying that off. Or, as it says, another type of payable account. If it was interest, for example, you'd have an interest account. Now, if the question says you collect or you receive a certain amount of dollars from a bill that you did on a previous date, that's again now you collecting the money where you already did the billing. So earlier, up in this one, when we billed them, we would have recorded the revenue and set up our AR. Now we're just collecting cash. So we don't record revenue again. We would just debit our cash that we collected, and we're crediting our accounts receivable account. So we're saying, yeah, we've already recognized the revenue when we billed it. Now we just credit AR. We're collecting that amount we already said we needed to receive. So you'll see that. I'll go through, as I said, post a video that goes through the solution, and you guys will see that there. And next, I remember last year having quite a few questions or students who just had trouble naming the accounts. So cash is a pretty easy one. If you're paying or collecting money, you're going to have the cash account. But other times students just have a bit of trouble. But really don't overcomplicate it or overthink it. Just name the account. Sometimes it will tell you, sometimes in the question it'll give you options you can choose from. But if not, just name the account based on what you're told in the question. So the example I gave here says that you paid for advertising for the current month. That could be what the question says. Well, you're paying for advertising, so that would be advertising expense. Maybe if it said in the ones we looked at earlier, in the earlier videos, you purchased inventory with cash. Well, that will be the inventory account. If you paid for utilities for the current month, that would be utilities expense. So just name it based on what the information says in the question. And one thing to note, and it goes through this in the textbook, is supplies. So supplies is kind of a tricky one. But hopefully this explanation will make sense. So when you first purchase it, when you first purchase supplies, it is an asset to you. So You get it, you put it in the cupboard, and you're waiting to use it. So it has a future benefit, which means supplies is an asset. But eventually you're going to use that supplies up. And when you do use it, that's when it becomes an expense. So at that point, it would become supplies expense. And we'll look at recording those adjustments in chapter 3. Sorry, this should be chapter 3. So next chapter. For now, when you see that you're purchasing supplies, it just goes into account named supplies, which would be an asset. Okay, that's just a little information for you guys as you start the questions. And the first one that I'm going to go through, oh, I lost it now. Sorry, one quick second. I will go through S2-7 as the first example and give it that as a solution. So that's on page 88 of your textbook. So if you want to go ahead and try that on your own, that's great, but it's the first set of transactions we've looked at in detail. So if you want to go through that one with me in the video, great, and then I can give you a few other ones to practice on your own.